Hello everybody and welcome to the Cyclical Investors Club YouTube channel. Today we are going to take a quick look at Tesla stock because I have a little bit of a warning for Tesla investors. I think there's still time for them to take profits or sell the stock because the risk of downside is pretty big. As always, this isn't investment advice. This is just how I look at stocks. If somebody asks me about it, this is what I would say and what I think to myself when I look at Tesla. I don't own it. I don't own the stock. I haven't ever owned the stock. I've mostly stayed out of the debates over Tesla because they've always been really kind of tribal to some degree. And on one hand, I've wanted to kind of warn people about certain aspects of the stock. But when people are really wound up about something, a lot of times you don't do any good if you try to explain to them kind of the dangers, or you get caught up in a back and forth with people. People just kind of get more entrenched in their positions. This is definitely one of those I've seen happen over the years. So for years and years, I just avoided it. I was like, that's just not something, I don't think I could contribute positively to any discussion on it. Until I started the YouTube channel, and for a few months, I put out some videos in 2021. Now, I've been writing on investing since 2015, so that was 6 years where I didn't write anything or make anything about Tesla. But in 2021, I thought they were finally earning money, and you could actually had some numbers to work with. It wasn't just stories, but the stock price was like super expensive, I thought. And so I thought, let's just give Tesla kind of the benefit of the doubt in terms of earning for a pretty long period of time and see what sort of valuation it would have worked out at and whether it makes sense to buy it. So I made that video, and I think it was January 31st, if I remember the date right, of 2021, which is right in here on the fast graph, like right in here. And I basically just warned about the valuation. So I was pretty skeptical that they could earn the amount of money that they would actually need to earn as consistently as they would need to earn it for as long as they would need to do it in order to justify the price that people were paying for the stock then. So that was basically an avoid for me in terms of categorizing it because we really didn't have solid information. We didn't have a long history of earnings or anything like that. So since then, the stock let me see if I can. The stock has fallen about 20%. Now at one point, and this isn't measured from the peak, this is measured from when my video went out. At one point it was down about 60% at the beginning of this year. So I think that was a good avoid call. They actually are not meeting those earnings expectations and earnings growth expectations. And so the people who bought the stock around that time are currently underwater. However, it has had a big rally since the beginning of the year. And so I wrote another article. This time it was an article, not a video. And in this video, and I'll put a link, or this article what I wrote for Seeking Alpha, which was the first Tesla article I ever wrote. I put out this April. And what I was warning investors about was the cyclicality of their business, which is kind of my specialty. So by that time, we had some earnings signs that earnings were going into a down cycle, which they are going in. Clearly, they're down 20%. And I would expect, I think they could even go fully negative in 2024. It doesn't have to go fully negative for the stock to be negatively impacted, but I think it's definitely a possibility or close to it. So I would expect these earnings to be maybe $1 or less, we'll call it. Because that's what cyclical businesses do. They have these, and this was kind of a double cycle because we had stimulus money and everything else, and Tesla did a great job capitalizing on that. And now that money's gone, and we're having a down cycle, and we don't really know how deep it's going to be. So since I warned people about the cyclicality, which was a sell rating, the stock is still up 30%, but you can see that it's coming down quickly. And really, Musk is telling people on the earnings call, I didn't read the whole one this time. I looked at it closer from my article 2 reports ago. Musk is saying this is a cyclical business. When he compares it to other car companies. And so when he talks about things like interest rates, people not being able to afford cars and affordability, that's cyclicality. That is credit cycle driven stuff that powers any large purchase. The housing market is a little weird right now. It hasn't fully reacted, but the car market is going to. One, because they were really expensive. But if we look at something like RVs, let's look at Thor. RVs are a good example. See, we get this giant run up and now crash, boom. And it's still, this is a prediction. I would say that probably is going to be a lower, right? So we see the same pattern. I could probably look at other, I don't know if I have any off the top of my head, other big purchases. But if you look at even like Ford historically, let me move myself here. This was the great financial crisis. I don't expect it to necessarily be that bad, but these are very cyclical businesses. They're sensitive when interest rates get higher. And so Tesla's not going to be any different from that. They might even be more cyclical. And then you also have, if any of these government credits or whatever go away, then they're going to be even more economically sensitive. So this is a stock, if you just look at it, trading at a 65 PE, even if you base it off of this peak earnings, it's going to be over a 30 PE, right? And growth is going down. So now someday growth will come back whenever the cycle bottoms out or whatever, and Tesla could become a buy at that point. So I don't have anything against the company per se, other than it's just way too expensive to make an investment in. So if I was going to buy this stock, usually, one, it was very expensive at like a super cyclical peak. So let's put it this way. Usually car companies can fall. Ford is the only car company who's basically been around long enough to not go, that hasn't gone bankrupt at some point. If you look at their history, an 80% stock price decline is pretty normal during a down cycle. So if we take Tesla's high price, 80% off, that's at $82.90. So let's call it under $83. There's no way I would consider buying it until it was lower than that. And for those of you out there that think that seem a little crazy, just this year it was trading at 100. So that's only 20% lower than what it was trading at like 10 months ago or whatever. And I'm not positive I would buy it then, but I certainly wouldn't buy it before that. And if the price is 200 now, it still has like 60% more than 60% to drop before it gets down to even like a reasonable level, I think. And if a stock's going to fall that much, in my opinion, it's worth selling it and not worth the risk of hanging on to it. So that's my pretty short kind of Tesla warning for investors. These earnings are probably going down unless something really amazing happens. That doesn't mean Tesla can't be great long term, but for me, if I'm facing a 60% drawdown, it's a pretty high probability in the stock price. I don't want to experience that. So if I owned it, I would definitely be selling. All right, thanks for watching, and I will see everybody in the next video. Later.